Broadcasting of Angel Broking, is joining us on the show along with him, Manav Chopra for Enables Ventures. He's here with us in the studios. Gentlemen, thanks very much for taking out the time. Manav, let's start off with you on the index. We're on a really strong footing this afternoon. 11,000 been surpassed and maintained. Do you think this move has got legs to take it up further and to hold fort?
Yes, in fact, good after 2.5 months of consolidation, the breakout today clearly is holding to its important, it's closing above its important crucial levels of 11,000 psychologically, which is very important. And, the breakout today is also accompanied by a good gap pattern. So, it further adds to the confirmation. I sense, this could be the start for the trending move that the markets were waiting for since past 2.5 months of consolidation. Looking at the pattern structure, I sense the immediate targets that the markets would see would be a rally towards 11,250 and eventually 11,450 are the targets that one can look in for. Bank Nifty has formed a very good base on the daily charts, and on the lower side 27,000 on the immediate basis are important support clusters. On the immediate basis, once if we exceed and close above 27,400, we could see a rally towards 28,000. So in all, everything is very well poised, and I think the momentum is here to stay.
Okay, Manav, I must admit, very good call given 2 days ago, and we'll come to those calls as well. Conversation with Amar too, but two large numbers that have come out. Lupin, and the numbers on your screen as well. While there's a one-time loss, revenue at 4,500, I think higher than the estimates of 4,104. The net Q3 loss is 152 crores. I think there was an expectation of a net profit from Lupin of about 280 crores. So there is a miss on the bottom line for sure, and which is why the stock is correcting. EBITDA margins, we'll wait for those numbers to come out as well. They were seen at about 15%. With the kind of revenue numbers that they've delivered, I'm guessing that either there is an exceptional out there or on the EBITDA front.
It is an exceptional loss related to parent-doferal litigation.
Okay.
That's what the Bloomberg has put out as well. So this exceptional loss has come about because of this litigation.
Okay.
Otherwise, it was expected to be a profit number.
And I think if you take the exception number out, then actually Lupin could have well pointed up profit as well. The numbers are actually, technically, as I just heard Darshan say, numbers are above estimates, especially on the top line. By the way, Praful Bora is with us, and just before I go to him, just want to mark that Adani Ports and SEZ is the other number that has come out. Revenues at 2,820 crores versus estimates of 2,734 crores. So that's the other number, which seemingly would have disappointed. I'm just trying to look as to why. Net income at 1,410 crore rupees. And that number seems to be better than the estimated 1,086, but something seems to have disappointed the street on Adani Ports because the stock has corrected very fast. We'll get to Adani Ports as well. Since Praful Vora is with us, let's just first go to him. Praful, good having you. Thanks much for joining in. Revenue numbers nearly 4,500 crores. I think the Bloomberg estimates were 4,104 crores. What do you make of these initial set of numbers? That's the revenue number, and they've reported a loss, but that's largely because of a one-time loss of 342 crore rupees.
Yes, so on the face of it, I think numbers are good. The thing is, if I look at the margin front, the margin is closer to 16.5%, and this is slightly lower on. Sorry, this is exactly where the difference is. So I think this is slightly better than what we had expected. Overall, I think I'm not able to see the US number and the India business number yet, but I think overall there's a big beat in the revenue front, and margins also, it seems like there's a big beat.
Okay, Praful, so were there anything, I mean, if on the management call, which we'll be talking to in a few minutes from now as well, what is it that you would want to know from the management, and what's the call or the pecking order amongst the large cap pharma space right now, because the valuations on a bunch of these would be a lot more reasonable than what they were maybe 2 months ago?
Sure. So we will seek some details about how this Volosec ramp has been. I think this quarter the US number should be strong because of cephalosporin seasonality. So we'll have to check out on that number as well. The other thing is, I think there is also plant inspection will happen, so we would want to seek some details on how the.
What would the call on the stock remain now? I mean, while we're taking a look at pharma as in its entirety, with most of the other big pharma names, put in a Dr. Reddy or a Sun Pharma now, from a business standpoint?
From a business standpoint, I'm not very bullish on the large caps. My top picks are Divi's, Torrent, and Ipca.
Okay, interestingly, Lupin with what the numbers that have come out thus far, and I know we'll also be wanting for the update on the warning letter resolution as well. But with the numbers that have come out thus far and the revenue numbers looking higher than estimates, is that still an avoid?
Yes, I think from a the operational perspective, I don't think so. There's a big change in what the cases as the cases. I think this quarter R&D has been slightly on the higher side. I think so. That's also. I mean, overall the numbers are decent considering the fact that R&D has been higher. One. And two, despite that, there's a beat on numbers, but I think it is still significantly below than what it was. Operationally, there is the thesis. From a quarter perspective, this is a decent number, I would say.
Okay. That's essentially the main comment that we wanted from you. Praful Bora, I really appreciate you joining us this quick and giving us a sense. Thanks so much for taking the time out. That's the view from Praful Bora. Okay, Adani Ports. Now, just trying to look at what's gone amiss out there. Not too much. I mean, the numbers are just about in line with estimates. No big misses, no big hit either. The stock has fallen 4%. There is a large exceptional as a result of which the net profit number has jumped up 41%. But net and if you look at the revenue and the EBITDA, that 5% and 3% growth seems to suggest that the numbers are largely in line with what was estimated, because we expected a 2% revenue growth. We expected maybe a 9% profit growth, and that's that's notwithstanding EBITDA growth of 3%, and even that's come largely in line.
In fact, revenue is slight beat, but nonetheless not warranting this kind of a cut on the stock price. 324 on Adani Ports right now and falling quick. Talk about these two names, Adani Ports and Lupin, and how would you, if at all there is a trade on these two?
If I talk about Adani Ports, specifically the stock has been in a short-term bear trend. It has declined from its important support levels, and it has breached it very decisively. And today also, since the prices are trading below 335, I sense it will continue to face selling pressure as long as it trades below those levels. So for me, immediate basis, Adani Ports could even retest the important support of 310 to 305 on the low side. Lupin, in fact, on the other hand, has been in a very broader range since past few months. The support is close to the levels of 810 and the resistance at 870, and it has been trading between those bands. So for me, I think I don't recommend trading into Lupin at the current levels. Let the stock settle down and form its pace, and then eventually take a call later.
Anand Tandon is with us, and before we go to Amar Singh, and we also have to get the stock specific recommendations from our technical experts. But Anand, just a thought, not really a buy or a sell, but these numbers that have trickled in thus far, we've discussed Lupin at length. Adani Ports, for one of the largest port operators, they've reported just about a flattish quarter. What does one do with the stock, or is it the action beyond the fundamental performance that will determine what happens to Adani Ports?
Well, I think near term that is going to be the case. Right now the companies which have leverage, etc., or which are politically sensitive are somewhat out of favor. So I think Adani Group as a whole also suffers from some of those problems. But that said, as you mentioned, it's one of the largest operators and has very good properties. And over a longer period of time is not particularly expensive if you were to remove all the other clouds and just look at the valuation. So on a valuation basis, etc., I would argue that there is a case to be made for investments. It's just that it's probably not the most opportune time right now.
Okay. Anand, stay on. We just need to get this round of ideas going as well. We've taken the index call from Manav Chopra. Let's get in Amar Singh in the conversation for his index call as well. Amar, what's the approach at 11,051? Would you be what's the fresh trade that you can enter, either on the Nifty, or you may choose to take it on the Nifty Bank?
I would say that looking at Nifty, technically Nifty has definitely witnessed a breakout. And earlier it was not able to sustain above the 11,000 mark, so it has breached that, and technically also it is looking now positive on the short-term charts as well, and the intermediate term trend also. If you look for the last almost 10 to 12 weeks, it has been trading and is not able to breach that level, so that has happened. And we also have the RBI policy tomorrow, so I think that also is something to be watched out. But yes, the trend clearly indicates that any dip in Nifty can be used as a buying opportunity. Ideally, a good level to buy is somewhere around 10,970, 980, because earlier that was a crucial resistance zone. So that being taken out, so any pullback towards those levels can be used as a buying opportunity with a stop loss below 10,900 and a target of 11,100 on the upside.
Specific stocks. Amar, let me come to you first.
I would say there are two stocks I would like to talk about. The first one is UPL. If you look at UPL, what we are seeing is that the stock is looking strong on the charts, be it the long-term charts as well as the short-term charts. And short-term, we are seeing some breakout of a consolidation, because earlier 780, 785 zone, that was a very crucial resistance zone for the stock. So the stock has taken out that level. And any correction in the stock towards 794 odd levels, currently it's around 800. So any pullback towards 794, 97, that can be used to initiate a long position with a stop loss of 773 and a target of 839 on the upside. And the second stock to look at is Amara Raja Batteries. This is one stock one can look at. What we are seeing in this stock is that the stock has been in consolidation now for many months, and it has formed a bottom, because on the weekly charts we have seen bullish divergence on the charts, and the daily chart also continues to be extremely strong. So this is one stock one can look at. So Amara Raja anywhere towards 783, 85 levels can be used as a buying opportunity, with a stop loss of 763 and a target of 831 on the upside.
Well, lo behold, let's change the face and keep the stocks the same. I don't know if the targets are same or not, but Manav, same stocks, yeah?
Yeah, stocks are the same. The targets are a little different. What he just mentioned is almost the similar structure, but specifically about UPL, it has been in a very good uptrend. So a stock which is in an uptrend and comes out of a consolidation is something one should buy into, and it's a stock which has been outperforming. I recommend a buy into this, a stop of 790 in UPL for an upside target of 865. My second pick is on Amara Raja Batteries. In fact, we have been recommending this since past few weeks, and the stock has continuously been managing to form a series of higher tops and bottoms, and on the monthly it has formed a very strong base, which indicates eventually from current levels also an upside of 10-15% is not ruled out. A target of 840 for Amara Raja with a stop of 770 on the lower side.
Okay. Well, take a look at the large cap space and the activity thereof. Bajaj Finance is nearing 2700. So NBFCs may have had a spot of bother. This one too corrected sub 2000 at a point of time in November or December, but it's had a sparkling return to glory. 2700 on that counter. It's almost, it's just what, 10% away from the high levels that it clocked in before this whole IL&FS issue broke out. Just goes to show, if you buy into quality NBFCs, you have actually made money too. Anyways, Anand Tandon is with us. Let's talk about some of these specific issues as well, because we've already discussed the index at large. Anand, I want to use Z as an example to ask you if moves like these suggest that measures taken which may provide a cushion to a stock price, temporarily or otherwise, I'm referring to the standstill agreement, would they give some floor to companies if Z is any example to go by? Or do you reckon this has got more to do with this whole talk of the Z deal being very close to fructifying?
Well, I think, it's difficult to generalize. If you look at some of the other stocks which are having various kinds of pressures, most of them have some kind of operational tangle. For example, the Reliance Group, the ADAG Group. There is, though there may be assets, for example, in the infrastructure company, which may make up the value more than what the current market cap is. But there are too many issues in terms of how the various regulatory agencies are looking at it and where the interests are structured. So therefore, it's very difficult to take a call on that. In the case of Z, that is not the case. You have clearly an operations which is doing very well, and the problem seems to lie in the leverage that the promoters have built up. So I think the market is just simply taking a call that whether this promoter or somebody else, there is value in the stock, so it shouldn't be beaten down beyond a point. It's already corrected downwards quite a bit, and now is of course going up. But the basic operational complications don't exist in the company. And if at all there is somebody who buys it, it will typically be stronger hands than the current promoters, which may actually put the company on a growth path going forward, is the expectation. So you have a stock which has fallen off a cliff, but it's still doing very well fundamentally. And I would imagine that's the argument why you are looking at Z at all. For the others, as I said, because the operations themselves get clouded in the various forms, it is not so easy a call to make.
Okay. Well, up about 6% in the session today is Z Entertainment though. And this is not just today, by the way, as we were saying, it's 2 days on a trot now that Z has done this. The other is the kind of reaction, Anand, that comes into companies which beat numbers marginally. Is it a factor of how a lot of companies haven't managed to do that, and therefore if a Tech Mahindra beats only on one factor, which is the net profit front, otherwise the numbers were largely in line, but beats marginally and the commentary is marginally positive, then the street rewards it unduly. Tech Mahindra is up 7.5%. SRF after the con call is up about 8-9% in the session today. There have been very few beats, but they are being rewarded very handsomely.
Well, obviously the market is looking for newer stocks to buy, and I guess that is where you are getting this kind of reaction. I think the Tech Mahindra reaction was a while coming. I mean, for a long time, it's been one of the dogs in terms of the IT sector, largely because of the fact that there is serious consolidation going on in their largest sector, which is the telecom sector globally. And therefore, they've been finding it difficult to kind of put up a much show in terms of the top line. It appears that now that is becoming somewhat, that at least that kind of consolidation is now behind, and there is some impact in terms of positive growth possible, and therefore I guess Tech Mahindra is beginning to look positive. But for the others, I think, again, if there is sustained growth possible, then obviously you will find that investors will be buying, because the frontline companies are kind of overbought and overowned to the hilt. So, you would be looking for new names wherever possible.
Manav, Tech Mahindra?
This stock has given a very good breakout. In fact, not on the weekly, even on the monthly time frame. So there will not be a good risk-reward ratio at the current levels. I sense if there is a short-term pullback towards the levels of 790, which is its important support, and on the lower side, 780 can be a stop loss because it is its rising gap pattern. Looking at this formation, usually after this move, you tend to see some sort of a consolidation or a pullback move, but eventually it leads to a bigger move going forward. On the medium-term perspective, 845 could be the immediate target that one can look at, and this could be purely on the momentum play, and 780 can be the stop loss on the low side.
Okay. Within the metals pack, Anand, is there anything that you're particularly watching out for in terms of numbers and performances? Because, this pocket has been under particular strain over the last 1 or 2 quarters with regards to pricing.
Well, I don't see that going away anytime soon, though, because of the fact that they have fallen off a cliff. You could see some recovery. But broadly speaking, unless you find that there is a global economic growth number which begins to look more attractive than what it is currently, and you have some more expectations that China in particular were to revive its growth, till then I think commodity pressures will continue, and I don't think that there will be any strong revival. Even in the domestic market, if you see, though there have been some better numbers coming in from the industrials, and therefore it would appear that there is at least some kind of industrial recovery that may be possible over the next 12 months. I think that's not enough perhaps at this stage to be able to drive kind of pricing for any of the metals. So it is going to remain a bit of a dog, though it may not fall much from here given wherever it's already fallen to.
For JSW Steel in particular, the last 3 quarters in a row, profitability has consistently declined. This quarter on, are there any expectations that you're building in for the counter?
Is that for me?
Yes, Anand.
No, I don't actually track the steel sector so closely. To my mind, if you are trying to track commodities, the best way to play it is through the commodities market. Because, why create the complication of trying to understand what's happening in each company, where finally all that matters is where the final commodity price goes.
All right, and as per expectations, this probably would be the 4th straight quarter in a row where profits of JSW Steel would have seen a decline.
Yeah, well, let's wait and watch how this scene unfolds. I was speaking to Neelkanth Mishra, and he was of the opinion that with the Chinese prices showing an uptick at some point of time, that benefit will come in. According to him, historically, such moves or such indications lead to tactical upsides, if not fundamental upsides. He was a buyer in the steel companies, or he recommended that people should be buying the steel companies. Let's wait and watch. Dana, Reliance Infra is down 34%. I think the ADAG group stocks, turn by turn, every single day, are getting punished. It was Reliance Communications day one, accompanied by Reliance Power. Day two, Reliance Power gave even better company to Reliance Communications. In today's session, I don't think those are down as much, but Reliance Infra has been taken to the cleaners, 34%. 78 million shares on the NSE alone. That's serious trading activity.
Taken to the cleaners.
Taken to the cleaners, and this is only one exchange, by the way. Yes, the volumes are higher on NSE, and therefore this would probably be it, with some more other volumes on the BSE as well. But this is just serious selling that's happening in this counter. And this need not be because of the numbers. This has to be, I know there's this whole talk about the accounting issue as well, but they're not out of their rights to not disclose, because they're not mandated to disclose the balance sheet numbers and provision numbers in quarter 3. So that will be evident in quarter 4. Now, I was just hoping that when we contacted the management or the corporate communications team and told them that these are the concerns, will you revert back to us? They still haven't reverted. So that was one thing amiss. I mean, ideally they should have by now if there was nothing amiss. And what happens if that mammoth debt that Reliance Infra has comes into question mark? I think that is something that the street would probably be worried about. But too soon, too much to gather right now, so I don't want to talk too much, just that the stock is under some serious pressure.
Yeah, I think the Lupin management is just getting ready to address the media and the press. We will shortly be going cutting in. I think they've started talking.
The company performance this quarter. I mean, after a tough first half of the year, we're very pleased to record growth, both over last year as well as sequentially in Q3. I mean, apart from growth in revenues, we've also improved our operating performance. If you look at our EBITDA margin, corrected for one-times, as well as Forex, we have grown our EBITDA margin. So very pleased with the improvement of our business overall in Q3. A big part of the growth sequentially has come from the US business turnaround that we had had stated in the past that the second half should be better for us compared to the first half. First quarter was really challenging for us. Second quarter, our US business stabilized. And third quarter, we have delivered growth in the US, driven primarily by the generic business and primarily by older products. We didn't have any material new product launches, but were able to gain share in situations where others had exited, but was still profitable for us. So really leveraging our strong supply chain, we're able to gain share in older products that helped us deliver growth on the generic side of the business. We've also grown Solosec, our anchor brand in women's health in the US this past quarter. I mean, it doesn't contribute much in terms of revenues right now, but when you see the script growth in the quarter, we recorded over 60% script growth over the previous quarter. So very good trajectory there that gives us confidence that we should be able to grow the product in the upcoming quarters and the upcoming years.
All right, back to the markets, and that's the management of Lupin. But one more pharma company reporting its quarter 3 numbers, and that is CIPLA. Revenues have come in at 4,008 crores versus 3,914 crores on a year-on-year basis. Expectations were slightly higher. I think 100 crores more was the expectation at 4,111 crores. That's a slight bit of a miss, but profits 332 odd crores versus 401 crores on a year-on-year basis. Expectations were closer to 371 crores. The stock, though, after seeing an initial reaction on the downside, has once again turned around and not doing all that badly, 1.8% higher. We'll wait and watch just to see how the margin figures shaped up, as well as how the US business has aided the growth this time around, particularly with the launches like Albenza and Toprol, which would have aided the US business this time around. Aside from that, supply constraints could probably have led to some implications on the financials. But we'll wait and watch as to more numbers and as and when they start coming up. But for now, the stock is looking stable, in fact moving up, 2% higher for CIPLA, 517 right now.
Well, that's CIPLA for you. And Let's talk about a couple of percentage points higher in trade. We'll try and get somebody to talk about this as well. But well, as Devina said, that's the summary of the numbers. Margins at 17.5, well, just marginally off, 70-80 basis points lower than what the Bloomberg estimates were. So a miss, but up about 1.5%. Lupin largely in line, down about 3%. Adani Port largely in line, down about 4.5%. So it's fun and games right now in the markets.
So it's not good to be largely in line.
Yeah, maybe it's not good to be largely in line. But yeah, CIPLA, interesting. I don't know, Anand, any thoughts here? I mean, we've now had 2 or 3 pharma names and large pharma names in the last 3 days. Pharma has been in news today as well with Dr. Reddy's around. I don't know how closely you look at CIPLA, but if you do, then any thoughts here on these numbers?
Well, I don't track CIPLA as closely as I do Dr. Reddy's, and I think, you know, if I have to take a call on the large numbers or on the larger companies, I think Dr. Reddy's to me still remains something which can present significant upside. I think their operating margins are doing good things, and with the new Suboxone thing coming through, you know, even the top line growth, which was somewhat muted, can probably come through as well. So if I have to make a choice, I would stick with Reddy's and an Aurobindo.
Okay. Well, Anand, of course, tracks Reddy's a lot more closely as well, and that's why his call or his preference goes for Reddy's. You know, Anand, I know we've done a lot of to and fro. Maybe we'll just let you go because just about time before we take that break as well. So take a moment to thank you for joining in today and giving us your perspective. Really appreciate your time today.
Thank you very much.
That's the view from Anand Tandon. Before we get in the CIPLA analyst, just a word on these numbers to Amar. CIPLA is up 2.5%, Lupin off about 2.5%. Would you take a trade on them as of now, or would you wait for a bit?
Looking at CIPLA, I would say that CIPLA definitely is looking positive on the short term as well as the intermediate term trend, and it has formed a bottom. So the downside seems to be definitely limited for CIPLA. And on the upside, this is a resistance 520, 525. If that is taken out, then it has a potential to rally towards 550 and 560 levels. So ideally, one can look at buying once 525 is breached decisively. And in that case, the stop loss needs to be of 503, that is today's low, below today's low. So one can look at buying around those levels. And as I said, on the daily charts, it has formed a very strong bottom, and that doesn't seem to be breached in the near future, and there is a possibility that the stock could rally, but only above 525 levels.
Okay, that's the word on the pharma companies today. Well, you know, the other really impressive name is Bajaj Finance today. I can't take my eyes off it. Fourth best performer, but the best performer of last year, 2018, calendar year 2018, on the Nifty, and continuing to move up despite difficulties within the NBFC space. This is the 12-month performance, 62%, but this has not come smooth despite falls. It's actually done really well for itself.
Gone down all the way to 2100 over,
yeah.
And then from there, the recovery, even in a treacherous
NBFC market.
Yeah, so it really stood ground.
Yep, and the commentary was fairly positive too. Anyways, we'll talk more about this and some of the others too on the other side of the break. It's a good day for the markets, I must say. Save for the Nifty, save for the Nifty Bank. The others seem to be doing okay. Yes, the mid caps and the small caps are sulking, but we'll talk about them too on the other side of this very, very quick break. Stay tuned to Bloomberg Quint Live. If you have any queries, do post them on our YouTube or Twitter pages, and we'll try and get them answered from our guests in moments from now.
Minutes left to go for market closing, and we are going strong as ever. 11,058, and no sign of a pullback, and no sign of the bulls wanting to give way in today's session. The Nifty still holding strong. Most of the names on the index are trading in the green. You've got a handful of 9 or 10 stocks which have lost out in the session today, led by IT as a pocket. Earnings cheer for most of them. HP still is doing well. Tech Mahindra is doing well. Z has lifted sentiment as well. So it is a broad-based rally, at least on the index per se. You can't say the same in the broader markets though for the mid caps and the small caps, which continue to witness pressure. But let's find out in a market like this what has made it to Yash Upadhyay's list of Fab 4 stocks this afternoon. Yash, good afternoon.
Afternoon, Devina. So it's actually an index-heavy Fab 4 today. So 3 out of the Fab 4 stocks are from the Nifty 50. Starting with Tech Mahindra, it's up 8% after coming out with an inline set of numbers. The revenues have grown by about 3% to 8,943 crores. Again, net profit too seeing a big 14% jump on a quarter-on-quarter basis. So all in all, good set of numbers, and the stock is reacting positively. HPCL is up as well, 3.5% today. They came out with a good set of numbers, but a double upgrade from IDBI Capital. First, they have upgraded the rating to buy and have also raised the target price to 260 rupees, which is at a premium of more than 10% from the current levels as well. Z Entertainment is in focus, up 5.5% after a big block deal saw close to 11.5 lakh shares change hands. We don't know who the buyers and sellers are, but we'll get you that data once it gets updated post market hours. And lastly, Dr. Lal Labs, it's up for a second straight day. It's gained more than 5% in that period and hit a 52-week high in today's day of trade as well, with volumes coming in substantially higher. Back to you.
All right, Yash, thanks very much for that. Gurmeet Chet of Complete Circle Consultants is here with us on the show as well. Gurmeet, good afternoon to you. It seems to be a heavy day on the large cap front, most of them contributing, uplifting the index to where it is right now. A good, strong, steady move. Hopefully, the volumes back it. But what's the sense now? We've seen the larger names and the kind of earnings performances that they're reporting. How are you set up in terms of adding new stocks to the portfolio and making sure that you get the right ones in terms of an investment from a one-year point of view?
Hi, Devina. So I think the divergence across equity and debt continues. If you see, as you rightly said, Nifty is almost now nearing 11,100. We still have mid-cap, small-cap index down 6% YTD. So I think what we like right now is this spot between 1.5 to 2 billion market cap to about $5-6 billion market cap. That's the space we think has seen a price correction. So they are not really small or mid caps. They essentially could be large mid caps or early large caps. They've seen price correction, but the earnings have grown decently in double digit. So you could see a more growth at a reasonable price kind of code working out for you. So we are interested in this. So also one thing which we are a little concerned about is the cost of capital and the way. So till the time this cost of capital comes down, so we are doing a study wherein amongst all global markets, in terms of return on invested capital being more than weighted average cost of capital, India ranks very high. So we have about 45% of the BSE 500 companies where the ROIC is more than the weighted average cost of capital. Now, if with the change of regime at RBI, with probably softer interest rates now, even globally, if this could also materially, come down, the space I'm talking about, which is the next 50 or BSE 100 to 300, essentially, it looks attractive to us.
Gurmeet, what's the verdict on Z or the Z Group stocks? All of them have moved up today. What are you hearing in Delhi? Deal happening, or is it just that the standstill agreement is leading to these gains for the last couple of days?
So we've been doing some calls with larger fund houses who have large exposures, including Birla, Reliance, and some of the others. In the sense we are getting is that contrary to the articles, it were the fund houses who proactively approached SEBI on this entire thing. So it's a little early to say right now. I think the fund houses seem to be comfortable as far as their agreement is concerned with the asset group. But you don't know this anyone can invoke the pledge, and we can see because the cover essentially is 1.2 to 1.5x across. So your after the price correction we saw from 450 levels post results, you are on a thin margin. So there could be few odd deals here and there, but it's best to avoid this space. One positive development which has come is on the SPV front of ILFS, where the one which are the servicing, where the money has already come into the escrow, are being allowed to service. So some relief might come for debt funds which had the Jharkhand and other papers. So I think let's give it some time. I think it's no point being speculative about this. There is some bit of pressure until the time the stake sale happens. my sense is it's best to avoid this space.
Okay, look at what else has gained today. We've spoken at length about SRF already. That one is up 9%, yes. But Praj Industries is now up a whole 9%, 141. And that's been a volatile stock, all right, because Praj went all the way to 160 or 157, then corrected back to 113 before it came out with its numbers, and again back to about 141. It's been a choppy last month for Praj, to say the least. But just that post the results from around 112, if you bring up the 7-day chart, you will see that post the numbers, the stock has only gone up. It's a sharp move from those 113 levels. The last 7 days, about 26% odd. Gurmeet, would you be a believer and a buyer into these companies? All the companies which benefit from the ethanol movement, right? There is Praj, there are sugar companies, there are pure play ethanol manufacturers, the likes of a small company called BCL, etc. I mean, I don't know if you track it or no, but are you a buyer into any of these?
So Neeraj, very, very tactically in very, very select portfolios, even if you see last year it was the carbon electrode story, whether it was, HEG and in fact graphite had a good set of numbers which came in. I think these calls have to be tacticals. Even on the ethanol story, the way Praj has run up, one has to be a little, careful in terms of adding, fresh positions to it. So selectively we are paying, maybe tactically in some, stories like Parag. There is some of the PSU banks which have come out of the PCA framework. We've seen something even on the oil marketing space. Whenever the oil prices, some softening happens in Brent. So, at best played tactically and limited to a very small portion of the portfolio.
For Praj in particular, Gurmeet, do you believe that there is more substance to this move, or it's, a mere advancing of the benefits that they will accrue?
I think the price probably is reflecting the benefits which are likely to accrue, Devina. That's why I said at this price one has to be a little careful. We've seen what happened to HEG and some of the other names, when you enter at a wrong price point. So I think, probably 1 or 2 quarters more, and then probably you can make up for a long-term story on this.
Okay, looking good right now. Amar, any thoughts on Praj? It's up now, up 10%.
Looking at Praj Industries on the long-term charts, be it the monthly or the weekly, this stock continues to be extremely strong. However, what we witnessed was that on 14th January, it had made a high of almost 165, and then it corrected all the way down to 111, and it has moved back. So I would say that the stock has a potential to retest its highs which it had made recently of 164, 65 odd levels. So yes, but I would not advise to buy at these levels, because there has been a gap up and the stock is up significantly. So only on any dip one can look at buying, because ideally a good stop loss for Praj is below 125 levels.
Okay, can you check?
All right. Talk about some of these brokerage names. In Edelweiss should pull that stock up. IIFL, Religare, JM Financial. To see how the performance has been. 141 on Edelweiss now. IIFL Holdings also down about 2.25. JM Financial at 77. Though right now it's moved up in the green by about 1.5% odd. But Gurmeet, while the markets are doing what they're doing, and we are seeing the Nifty scale new highs, the beneficiaries of these brokerages actually have not done a whole lot much. Obviously, there is the NBFC component which weighs down, but nonetheless, the optimism seems to be completely wiped off.
Yeah, Devina, and we've been discussing this cost of capital. If you look at even Bajaj Finance numbers, their last quarter, the cost of fund was 8.2%. Now you look at the India Bulls NCD, which has come and hit the market yesterday. That's 11%. So, and this is the divergence I'm talking about. So we have to focus on the liability side on some of these, NBFCs, brokerages, to really comment on, how they're going to pan out. So my sense is that, RBI policy tomorrow could bring in a bit of a repeat. There is a case, outside chance of a rate cut, while the change of stance looks more and more certain. Also, there have been a lot of negative news on some of these financial names. So Motilal had issues with Aspire, which is their home affordable housing segment, where they posted losses. IFL has had a few fines internationally. There have been talks of some salary revisions there. So they've been grappling with their own set of internal problems. But niche lending, players like Chola, which are more auto and vehicle financing, Bajaj Finance, we anyway saw a good result coming in, could be could be plays. I think the better plays could be some of the, niche financials like, so look at the largest AMC in the country today is basically 26,000 crore market cap, which is HDFC Asset Management. All your life insurance companies are mostly below IPO price, barring HDFC Life. So an SBI Life is 2 times, your embedded enterprise value, whichever you want to look at it. ICICI Pru as well. So these are better plays there. That's my sense.
HDFC AMC, Neeraj, when it listed, closer to about 1,500, 1,600. At that time, people went crazy behind the stock, and in fact, targets of 2,200.
I think with the rules, since the rules changed, I think that the earnings trajectory for AMC's change, and maybe that's one reason why these stocks have fallen off. I mean, look at RNAM. Yeah. I think when HDFC AMC listed, RNAM was 260 or thereabouts, and from there to about 130 on last time that we checked yesterday. Yeah. So that's had an even steeper fall. But I think the rule changing is the TER and the upfront commission, etc. All of that leading to the change in the revenue mix. By the way, I'm glad we looked at Reliance Nippon Asset Management. Look at that stock today. 17%, did I see that right? Let's pull up Reliance Nippon Asset Management. 17%, 2 million shares traded. Well, this is a phenomenal recovery by Reliance Nippon Asset Management. Severely undervalued compared to HDFC. But in today's session, bouncing back. I don't know, Gurmeet, did you talk about
the
AMC business? It never actually
really fell. If you noticed it, RNAM, even when the rest of the ADAG stocks fell, RNAM probably fell 2 or 3%.
Yeah, so, well, not having leverage probably helps as well.
Yeah, so this move actually is not probably to cover the losses that it had over the last few days, but this is an additional move to the already existing moves that it had.
Well, a bit of a fall though, maybe, but nevertheless, 17% higher right now. Gurmeet, would you be a buyer in Reliance Nippon Asset Management because of the valuation discount that it has over HDFC AMC?
I would be, Neeraj, and I have a bias because I've been an ex-employee. I've worked there for 7 years, prime part of my mid-end career. So I think it got dragged because of the fact that obviously the entire ADAG came under pressure post ARCOM going to insolvency, and then we had poor results from the other companies. But if you look at it, this is the only business where I think they are very, very sound. On mutual funds, is this 2.5 lakh crores of assets. If you take ETFs, if you take the pension fund mandate, the EPFO mandate, they're everywhere. So that's about 4 lakh crores. They make about 120 crores quarterly profit. You're right. It's also AMCs are valued on a percentage to their assets. So while HDFC is about 7% after correction, 6.5% to be precise on valuation on assets they manage. Reliance is about probably now 4%. So, and they have a good retail mix. Reliance obviously has not, they are not very heavy on the corporate side of the book, which is the debt book, where that's where the HDFC and the ICICI score over. So very, very good valuation. Only thing is this because of being part of the ADAG pack, it sees what it sees right now, but a very good price point for a long-term investor.
Okay. We haven't spoken about the Jubilant Group stocks at all right now. We'll talk about them. First, let's get in Yatin Mota to talk about what dealing rooms are recommending in the session today. He's here with his channel checks. Yatin, what are you learning?
Afternoon, Neeraj. Tata Motors, that stock will be in focus. Obviously, tomorrow they are reporting the quarterly earnings. But over the earnings, dealers are indicating that there is, a positive accumulation in the future and option segment. And based on the FNO trends, they are recommending a buy today, sell tomorrow kind of a strategy, which is BTST. CIPLA, watch out for that stock. When I was talking about, CIPLA to the dealers, the stock was almost flat and 6% higher for that one. Dealers do indicate that post the earnings, there is a lot of short covering which has happened as far as CIPLA is concerned. So watch out for that one as well. And Grasim, another one which is showing some strength, 4.5% up for that one. And dealers do indicate that on the back of domestic fund buying, Grasim has been doing well in trade, and that trend is expected to continue according to dealers. So watch out for all of these stocks for trading tomorrow.
Well, let's wait and watch what happens there. Thanks a lot for that, Yatin. Manav, Grasim, and maybe if you can throw in one more chart there, Bajaj Finance, which is rock solid today.
Sure, I'll start with Grasim first. The stock has already witnessed a series of decline, and it is just bouncing since it's at oversold levels. I don't see the stock actually go beyond the 775 levels, but if somebody wants to trade Grasim, it will purely be on short covering basis and for a very short term trade. But Bajaj Finance definitely has a very good structure and chart in place. It is backed by a very good primary uptrend and has also given a good breakout. So if I have to put my money, definitely Bajaj Finance would be the stock to go in for. And also the breakout has accompanied by very good volumes. I sense in the near-term perspective, will not be surprised if it takes, it goes beyond the 3,000 level, which was its previous all-time highs, and eventually one needs to have a target of at least 3,100 eventually. On the lower side, 2,600 will be a stop loss, which is also a good risk reward at the current levels.
Okay. So that's the verdict on both of these names for the session today. CIPLA is up 5%. That's a big move for CIPLA in the session today. Amar, maybe a chart check first on CIPLA, 535 and counting.
Yeah, looking at CIPLA, if we see, CIPLA continues to, I would say, remain positive on the short-term charts. It did correct from 520 levels to towards 500, but has bounced back. So on the daily charts, CIPLA is positive. On the weekly charts also, we've seen some, definitely we can say that CIPLA has formed a bottom. And I had earlier spoken also that trading above 525 levels is something that is required for CIPLA for any up move. So it has breached that level, and currently it's around 537. So there is a potential upside of 555, 560 where it could meet with some profit booking. But yes, any dip can be used to accumulate CIPLA.
Okay. JSW Steel, net income at 1620 crores, which is the profit number. 1620 is lower than what we were working with. The expectations were, and with a presumption that these are consol numbers which are getting flashed, the expectations were 1727 crores versus 1753. That would have meant a downtick of 1.5%. This seems to be a lower number, 1620. Wait for the other numbers to come out, but from the looks of it, it's not looking all that great. We'll get the Bloomberg screen up on this as well to just show you what the other numbers have been like. Revenues were expected to be up about 18% at 20,919. And those numbers... okay,
20,320.
Yeah, so those, well, you can argue marginally lower, maybe 2-3%. So that seems maybe a small miss, but largely in line, I would reckon. On that base, that top line number doesn't seem to be as big a miss, but the bottom line number certainly seems to be a bit of a miss, Devina.
The overall trend also that we've been seeing over the last 3 quarters in a row is that JSW has been seeing a constant quarterly decline in its profit numbers. You did see revenues picking up in the last quarter, but that has come in lower this time around. So 20,320 versus last quarter. Nonetheless, on a year-on-year basis, it is still an uptick, but 3 quarters in a row, at least the profitability number has been declining, and so has the operating profit margin. We'll wait and watch as to how much does it come out to be this time. 21% was the expectations. That has been dropping consistently along with the profits in the last 3 quarters. Last quarter was somewhere around 22.8. On a year-on-year basis, same quarter last year was about 22%. So that would have been a marginal decline as well. But we'll wait and watch. The stock, though, however, is up about 2.5%. Realization per ton, that is an important number to keep an eye out for, and what happens thereabout, as well as the volume numbers this time around, to see whether or not you would see a slight uptick in the volume numbers.
Just looking at the costs and otherwise, Devina, it seems like the margin numbers are better than the estimated 21%. Maybe that's what's leading the stock higher too. So keep that at the back of your mind. Net profit at 1624, but the operational number seems okay. Devang Sangvi, he's research analyst at ICICI Securities, joins us right now on the phone line. Devang, good having you. Thanks much for joining in. What do you make of the numbers? Maybe a miss on the bottom line front, but the operational numbers at least seemingly seem to be better than the 21% EBITDA margin estimate that the Bloomberg terminal poll had.
Hi Neeraj, good afternoon.
Good afternoon.
Thanks for having me on the show. Pleasure. Yeah, the operational numbers are better than our estimates. The margins came in higher at 22%. We were expecting a EBITDA margin of close to 20%. Even the EBITDA absolute number came in at around 4,500 crores. We were working with a number of 4131 crores. The volume came slightly below our estimate. We were working with a volume of around 4 million tons. I think it has come around 3.7 million tons. But the EBITDA per ton has come to around 12,000 rupees per ton. We were anticipating around 10,000 rupees per ton. So as you rightly pointed out, operationally the numbers are better than our street estimates and our estimates.
Okay. So what would this mean for the company? I mean, in one of the statements, the company said that that increased trade headwinds could be a problem for exports. You referred to the volumes being lower than what you had worked with. What do these numbers mean for the company? And by and large, would you be slightly bullish on steel companies after the pummeling that they've taken over the last 3 months?
Yeah, see, in a scenario of a softening steel realization, a company like JSW Steel is relatively better placed as it is conversion cost is one of the lowest globally, and this has been reflected in their performance over the years. So in this challenging scenario, I think companies like JSW Steel will likely to report steady set of numbers going forward also. As you rightly pointed out, steel prices were pretty volatile during the months of November and December, but they have stabilized in the month of January. And I think I will remain positive on a steel company like JSW Steel because it has good efficiencies in terms of cost, and it also is venturing into backward integration in terms of iron ore mining. So that will ensure raw material security also going forward. So overall, I stay positive on JSW Steel.
Okay. Devang, appreciate you taking the time out. Thanks so much for joining us today and giving us that perspective.
Thank you, Neeraj.
That's the view from ICICI Securities, bullish on JSW Steel. I know Gurmeet Chadda is with us, but we just need to take some closing strategies. And boy, CIPLA, that's rip and roaring on the charts now. 7% for a CIPLA, 542 and counting. Closing strategies, Manav, one top closing idea, of a quick call on CIPLA as well.
Okay, I'll start with CIPLA first. The prices have actually seen a very good breakout from its deep oversold levels, and I sense this momentum would sustain on the immediate basis. 565 would be the targets to go in for a short-term basis. Yes, the bottom is formed. At the current levels from the Bank Nifty, I sense the PSU banking space for my closing strategies. There are chances we could see a good short covering. So Union Bank would be my pick at the current levels. The prices are at,